What's up, guys? My name is Badman, founder of In My Own Opinion. Today, I want to properly explain how to use auto support and resistance on TradingView to enter trades correctly, especially if you trade gold XAUUSD on the 15-minute time frame. This is not about rushing trades or copying signals. This is about understanding what the market is doing and why you're entering a trade. First of all, go to TradingView, click on indicators and search for support resistance zones or auto support and resistance. Once you add it to your chart, the indicator will automatically mark important areas where price has reacted multiple times in the past. These are not random lines. They represent areas where buyers and sellers have previously made strong decisions. Now, this is very important to understand. Support and resistance is not one exact price. It is an area. Price does not reverse at one perfect number. It reacts within a zone because the market is made of orders, not single prices. That's why zones work much better than drawing thin lines. Support is the area where price usually slows down, rejects, and moves up because buyers step in. Resistance is the area where price usually slows down, rejects, and moves down because sellers step in. These reactions happen because large players, banks, and institutions place orders around these zones. One of the biggest reasons traders lose money is because they don't respect location. They enter trades in the middle of the chart just because they see a candle moving. That is emotional trading. Professional trading is all about where price is, not just what price is doing. So the rule is simple but powerful. You do not trade in the middle of nowhere. You trade only when price reaches a meaningful support or resistance zone. But here's where most people still get it wrong. They see price touch a zone and they immediately buy or sell. That is still guessing. A zone only tells you where to watch, not when to enter. The entry comes from confirmation. When price enters a support zone, you pause, you don't rush. You observe how price behaves inside that zone. You're looking for signs that sellers are getting weak and buyers are stepping in. This can show up as long lower wicks, slowing momentum, or a strong bullish candle closing after rejection. A bullish engulfing candle or a strong close above the previous candle is often a clear sign that buyers are in control. Only after that confirmation candle closes do you enter the buy. The same logic applies at resistance. When price enters a resistance zone, you don't sell immediately. You watch how price reacts. If price struggles to move higher, prints long upper wicks, or closes with a strong bearish candle, that tells you sellers are defending that area. Once you get that confirmation candle close, then you enter the sell. Now, to increase your probability and avoid unnecessary losses, you must trade in alignment with the overall trend. This is where EMA 200 comes in. EMA 200 helps you understand the dominant direction of the market. If price is above EMA 200, the market is generally bullish and you should focus only on buying from support. If price is below EMA 200, the market is bearish and you should focus only on selling from resistance. This keeps you trading with momentum instead of fighting it. Let's talk about risk management because entries without risk control will destroy your account. When you buy from a support zone, your stop loss should be placed below the support zone, not inside it. If your stop loss is inside the zone, normal market noise can take you out even if your idea is correct. When you sell from resistance, your stop loss should be placed above the resistance zone for the same reason. If you notice that the stop loss needs to be extremely wide just to make the trade work, that's a warning sign. It usually means the setup is not clean. In that situation, the best decision is not to trade. Skipping trades is part of being a disciplined trader. For take profit, you always think in terms of structure and zones. If you buy from support, your take profit should be placed near the next resistance zone. If you sell from resistance, your take profit should be placed near the next support zone. This keeps your trading logical and structured. You should always aim for a minimum of 1 to 2 risk to reward, and whenever the market allows, 1 to 3 or more. Another very important point is market condition. Even with the best indicator, there are times when the market is simply not clean. If price is choppy, moving sideways, producing small candles, or if support and resistance zones are very close to each other, that is not a good environment to trade. In those moments, patience is your edge. Waiting protects your capital. Support and resistance indicators do not make money by themselves. They are tools that help you read the market. Your job as a trader is to combine location, confirmation, trend direction, and risk management. When all these align, you have a high probability setup. When they don't, you wait. This approach is simple, but it's powerful. Most traders fail not because trading is complicated, but because they don't follow simple rules consistently. That's how you use auto support and resistance the right way. My name is Badman. If you want me to break down real XAUUSD charts using this method, comment gold and follow for more educational trading content.